Hey, everybody, welcome. Thanks for joining us for our Wednesday webinar. If you have not yet signed up to get our emails or texts, go to famemain.com/join and make sure that you sign up for that. We'll keep you in the know of what's going on, and make sure to follow us on our social media. We got some pretty cool content happening there. Okay, so I am Nikki Vachon. I'm a college access counselor at FAME, and I'm joined by one of our partners, Liz Hilton. She's a client service analyst senior for ECM Solutions. They're an amazing organization. We're going to tell you a little bit about them in a bit, but get ready, get set, repay. That's what we're going to be talking about today. So I'm glad you joined us. Okay, so repay restart, it's happening. That's what FAME is calling this restarting to repay student loans. So repay restart is happening. We're going to talk about the repayment plans and tips. So you have options. People can't make their student loan payments. There's all kinds of options. We got some tips for you. The feds knew this was going to be difficult, so they built an on-ramp to make sure we had some bumpers in place to make this as painless as possible for folks. And then there's some temporary programs and some changes going on to the benefits that we have in federal student loans. So we're going to talk about Fresh Start, the one-time income-driven repayment plan adjustment, loan forgiveness and cancellation programs, as well as student loan tax benefits. So we're going to dive right in. Repay Restart. Those student loans have been on pause for 3 years. And I know we had some, is it going to happen? Is it not? We've had some few starts and stops, but this time it's really happening. So to dip our toes into it, student loans are going to go into repayment. They already have started somewhat. So interest started accruing as of September 1st. So folks that have student loans can see that interest has started accruing on those loans where it's been on pause in the past. Bills and statements are supposed to arrive at least 21 days before your payment is due. And I'm feeling like this may or may not be happening because some things have changed, but we're going to talk about that. And for some people, the first due date is going to be sometime this month. So for a lot of folks, they may have received a due date for October. So we've put this into an easy 3-step process. We're going to update, plan, and we're going to ask for help. And Liz, you have some thoughts on the due date, sometimes starting in October, some might be later.
Yeah. So we're seeing this in the reporting that some of the servicers are actually stretching their payment due dates for their borrowers over about a 2-month period of time. So just pay close attention to your next payment due date. If you're looking at that and you're questioning it, it might not necessarily make sense. Like I said, we've seen a lot of weird things in the data. Go ahead and connect with your servicer, or advise connecting with a servicer to verify that that next payment due date is in fact correct.
All right, go ahead and take it away.
Yep, sorry about that.
No
Okay. So overall, what's the first step here? You need to make updates. So make sure that you have all of your logins set for studentaid.gov and your loan servicer. Now, it's very likely that your servicer has changed or the majority of student servicer has changed. We'll get into that here in a little bit more detail in a bit, but the main thing is to make sure that your contact information is up to date, because otherwise you might not get the exact information that you're needing. Another suggestion would be to sign up for updates through studentaid.gov. So a really hot topic right now still would be loan forgiveness updates. And between these 3 resources, so that's studentaid.gov, your servicer's website and login, and these different announcements, these should help you know all of your different options, how to act on them, and when to act on them. And I'd like to go back to that second bullet point. Update and confirm your contact information. Even if you don't think that it has changed, just make sure that it is exactly what it needs to be so that you are getting the correct information. All right, Nikki, I think you have some more tips. So let's go ahead and take it to the next slide.
Absolutely. And I'm just thinking, as you were saying that, how many people moved during the pandemic? right? I'm sure the first thing people were thinking of is I need to update my contact information. So it's really super important that folks do that. And then we need to plan, right? We need to look at what the student loan payment is going to be and start incorporating that back into our budget. And for some people, they haven't been making that payment, right? And if it's out of sight, it's out of mind. And maybe they've taken on other payments instead because they haven't had to make student loan payments. So it's really important to start putting that back into the budget. I'm not sure if folks know that we have a free tool for Mainers to use, Enrich, where there's not only a budgeting tool that helps incorporate your goals or future plans, but there's also great information about how to set up a budget or how to be realistic or tips to even make it more friendly. Determine what kind of a repayment plan is best for your financial situation. The great thing about having a federal student loan is that there are flexible repayment options, and what you're in right now may not work for you. You can change it. We're going to talk about that in a minute. If you were not set up to make automatic payments out of your bank account, or maybe you were, if you haven't yet, maybe you want to enroll in that or re-enroll, because they're not going to automatically put you into that. To set up for automatic payments, automatic debit, that can get you 0.25% interest rate discount. So there's a great way to save some money. Pay attention to emails, calls, and letters you get from your servicer. And this is where I want to kind of lead into the next piece, which is watching out for scams. So whenever someone calls me or talks to me about, I got this letter or email or call from my student loan servicer, I really want folks to be sure that they are talking to their loan servicer, because there's a lot of scams, right? So I tell people, before replying to anything, go onto your student loan servicer account. Call them directly. Don't necessarily respond to what you've received. Call them directly and say, I got this letter. Is this from you? What's my plan? Because we don't want folks to fall for scams. And keep documentation and notes of everyone you talk to, what time, their name, what date it was, and what they said to you. Because I don't know about you guys, but I will forget within 5 minutes, what happened and when. So it's really super important. Liz, I think that you had some thoughts on scams.
Yeah, the biggest red flag when a scam company is reaching out to you, and I think we all know that this is a prime environment for that, is if they ask you for money to help you make a payment plan. That's the biggest red flag. You should not have to pay anyone to help you come up with a payment plan to repay your student loans. So just remember that. If you've got somebody saying, hey, just for $50, I can help you sign up for this application. Stop and do what Nikki just recommended for you to do, or give us a call.
Absolutely. Call ECMC, call FAME. We're gonna walk you through it. Never pay anyone for things you can get for free. Okay, so let's talk about who might be your loan servicer. So I think it was 2021, the contracts for student loan servicers ended, and they could re-up, and some decided not to stay in the business. So the people that you were paying before the pandemic may have changed. Your loan may have moved to a different loan servicer. So these are the organizations that are still in the business. You're going to go to studentaid.gov to see who is your loan servicer. Okay. And again, you get some emails or calls from them. We're not going to respond. We're going to reach out to them directly ourselves. Okay, so let's make this plan, right? So you've been notified your payment is going to restart, and that may be doable, right? Or maybe it's not doable. We've got options, and we're going to talk about the repayment plans that you have available to you with federal student loans. This is one of the benefits we have with federal student loans, and they're kind of broken up into two chunks. Now, one of the repayment plan chunks are income-driven repayment plans. And that's where your monthly payment is going to be based on how much you earn, okay? And then there's the other chunk, which is your monthly payment, is based on how much you owe. All right. Now, you may not qualify for all the different repayment plans that are out there. Sometimes you have to be, have your loan taken out after a certain date, or you have to have your loan in a certain plan, like maybe it's a direct loan or a FFELP loan. You have to have the right type of loan to qualify for that. So I don't want to get too much into the weeds here, because I'm going to show you a cheat to figure out what you qualify for in just a minute. Okay. All right. So I really like a visual aid. So this kind of breaks down those payments that are based on how much you owe, or the income-driven repayment plans, which are based on how much you earn, what your income is, right? So I just want to start with the standard plan. When a student leaves school, they have a 6-month grace period. They don't have to make their payments. They're kind of getting settled, getting into a job, getting ready to start repaying their plans. They're automatically put into the standard repayment plan. That's where your payments are chunked up into 10 years, sometimes less. If they don't owe that much, it's just going to be equal payments for up to 10 years. Okay. That may be the best option for folks to pay off as quickly as they can, because that means they're probably not going to pay as much interest over the life of the loan, right? But that might not be doable for some folks. So if that doesn't work, we can switch to another plan. So the graduated repayment plan is where payments start off small, and then every 2 years they gradually increase. All right. This is ideal for someone who maybe their income starts out very small, but over time we know their income is going to be larger. Extended repayment is where we stretch the time that you have to repay. It's a longer repayment period, right? So because it's stretched out and it's a longer period of time, the payments are smaller, right? This might be more doable, but a downside to that is, because you're paying it over for a longer period of time, it might cost you more over the life of the loan because you're paying more in interest. Okay. All right. So those are all based on how much you owe. If you want to opt for an income-driven plan, this is where we take how much you earn and we compare it to the poverty level. All right. There's a national poverty level, and you figure out how much that is. The difference between your income and the poverty level is called your discretionary income. Okay. And depending on which plan you choose or which one you qualify for, your monthly payment is based on a percentage of that discretionary income. So that may be making your payment more affordable. You also could have a longer period of time to pay that off. So that's going to stretch out the time that you have to repay it, making your payment smaller. So keep that in mind. If those don't work, we have other options. Okay. So you could consolidate your student loan. So what that means is you're taking out a federal loan to repay other federal loans. Okay. And what that does is it's going to pay off those other loans. And maybe you have multiple loans and you're paying multiple payments to different servicers, during the month. This consolidation is going to put it all in one place where you're making one payment to one loan servicer each month. Now, a downside of this is that you've now reset your clock. You now have 10 to 30 years to pay this off. So the time that you had, you're now going to be paying it off for a longer period of time. It is going to make your payments smaller. But again, anytime we stretch out those payments, it could be more interest over the life of the loan. Now, we also have an option to refinance, and I really want to put the caution flag on this, and we're going to talk more about this in a second. Refinancing is where we work with a bank that's not a federal lender, right? And we take out a loan to pay off those federal loans. So that's another option. Maybe if interest rates are low, this might be a great option for someone who wants to aggressively pay off their student loan. They've got great credit. They have high income, so maybe the income-driven plans aren't going to work for them. That might be a good option, but really, let's pump the brakes on that for a second. So if I want to do change any of these plans, if I want to change any income-driven plans, I'm going to have to go to studentaid.gov and apply for these. And the reason for this is because we need to tell the federal government how much we earn so they can figure out what our monthly payment is. Okay, that's at studentaid.gov. And this is something you do yearly. So once you do this, they recalculate how much your monthly payment's going to be. And that's going to be good for the next year when you have to reapply for it again. Okay, so that's something we do every single year. But if we want to change to any of the basic repayment plans that are based on how much you owe, we're going to contact our loan servicer and say, hey, I want to switch my plans. Okay. Now, I don't want you to have to commit to memory which plans you qualify for, what's going to be the best option for you, because there's a loan simulator, and this is an amazing tool. Okay. If you go to studentaid.gov and you go under loan repayment, there's a loan simulator. And this is a choose your own adventure path. Remember those books where you could choose which pathway you wanted to go to? Behind the scenes, your federal loans are loaded already. They know how much you owe. What they don't know is what your plans are. So you need to say that maybe you're looking for the best repayment strategy. You want to find out what's going to be best for you because it's different for everybody. Or maybe you're struggling with making those loan payments and you want to find out what your options are. Maybe you're going to go back to school and you may be wanting to borrow more. So you want to see what that's going to look like, how that's going to affect you going forward. So let's show you what this looked like. I went down the path of I'm struggling with my payments, and it's going to tell me my options. I can apply for an income-driven plan where I plug in my income, where I live, how many people have to live on that income, other things that they're going to ask me questions and lead me down a path. That's going to show me what income-driven payment plans I qualify for, because I may not qualify for all of them, right? Option 2 is a forbearance. I'm going to talk about that in a little bit, but a forbearance is basically putting your payments on pause for a little bit of time until you can start making payments again. So if I plug in that my salary is $35,000 a year, how much I earn, if I have 2 people in my household, if I simulate that, see what that looks like, that's going to show me my best repayment option. And for this borrower, they qualify for the SAVE plan, which is new. And Liz is going to talk about that in a minute. Some of these payments, depending on how much you earn, could be $0 a month. And that's an actual payment. When we start talking about forgiveness options, these $0 payments count towards those. All right. So this is kind of what that simulator looks like. You don't have to commit to memory which plan is which. The loan simulator is going to show you what your options are. All right, Liz.
All right, the SAVE plan. So what is SAVE? It stands for Saving on a Valuable Education. And in addition to calculating your monthly payment amount based on your income and family size, the SAVE plan provides the lowest monthly payments that any income-driven repayment plan available has, and that's nearly to all borrowers. Now, there are some benefits to this program that will be available or that are available already this summer. So that was July of 2023. And then there's other benefits that won't go into effect until next summer, July of 2024. So first, just want to go over what's already gone into effect. So first off, increasing the income exemption from 150% to 225% of the poverty level. The plan eliminates 100% of remaining interest for both subsidized and unsubsidized loans after a scheduled payment is made under the SAVE plan. Now, there are other benefits that go into effect or that did go into effect this year, but we're covering the most important highlights that you need to know for now. Let's go ahead and discuss what goes into effect next year. Payments on undergraduate loans will be cut in half. So that's going to be reduced from 10% to 5% above the 225% of the poverty level. Yes, it's confusing. The basic point that you need to understand is that the increase from 150% to 225% above the poverty level and the decrease of the undergraduate loan payments from 10% to 5% of that, these benefits are like buddy benefits. They go together to give you the full benefit of this plan. But here's the kicker. One goes into play now, and the other you have to wait for until next summer. Now, the reasoning behind this is basically paperwork and an approval process. Okay, so I'm going to change gears here for a second, but I'm still talking about the SAVE plan. Under the SAVE plan, there is quote unquote forgiveness. Now, I know that we've all heard about forgiveness here, forgiveness there. This is approved, that's approved. It's pretty crazy. What I'm talking about is something that's been included specifically underneath the SAVE plan. So, first off, what it is based off of is your original principal balance. And then based off of that, you may have the opportunity to get some forgiveness of the remaining balance after at least 10 years of payments. The higher that original principal balance, the longer that time frame is to forgiveness under the SAVE plan. There are many critical clarifying details that the Department of Education has not released in order to fully understand how this forgiveness is going to work. Just be aware that it is a thing. Just like I said earlier, there are other benefits, but these are the need to know points. Okay, I'm gonna stop for questions, hop in the chat, come off mute, whichever you'd like. All right, not seeing anything. So, Nikki, I believe you have some more repayment tips for us here.
Absolutely. I think the SAVE plan is going to be a game changer for a lot of folks.
Absolutely.
Okay, repayment tips. So these are basically just some ideas or ways to Jedi mind trick yourself into being able to do this, right? So figuring out whatever it is that helps you motivate you to get the student loan paid off. So the name of the game really here is, how do we pay the least amount of money over the least amount of time? That's repayment. Forgiveness may be not the best plan to do that. That might end up paying you more over time. But like, let's get ourselves motivated to get this done as soon as possible. My friend gave me this tip because she has some student loan debt, and she also pairs that with an Amazon issue. No judgment, because I do love to shop with the Amazon, but she really wants to buy a house. So what she's done with her laptop is she's put a sticker on it to say, I want to buy a house someday, so that what she can really do, what she's really saying is that I really want to pay off the student loan as fast as possible so I can work on my future goals. So she has something that she puts front of mind for her to be able to motivate her. Now, this could be a debt tracking worksheet, a poster, a sticker, whatever it is that puts it front of mind for you to really put into action what it is your goals are that you're trying to do. Use tax refunds or found money, okay, to help reduce. So anytime you have a windfall of some sort, paying off the principal of that loan will help you pay it off faster and maybe pay it off cheaper over the life of the loan. Because the option really here is we're looking to save some money. Let's talk about found money for a second. So every state has an unclaimed property program where if you have a business that maybe owed you some money and you didn't claim it, or they didn't know how to find you in order to give it to you, it goes to the state and they keep a record of it until you go to claim it. So for an example of this, I used to have a landline with Verizon, and halfway through the month that I'd already paid for, I ended my program and I went just with my cell phone. At that same time, I moved. So Verizon didn't know where I lived, so they couldn't send the money back to me. So that went to main unclaimed property. If you go to mainunclaimedproperty.gov, you can look up to see if there's any found money that you might have, so that you can use that extra windfall to pay off your student loan. So just another place to look. A couple other strategies for repaying debt is the snowball or the debt avalanche. And so this is another tool that my friend got me onto, because she's very much into how am I going to pay this off as soon as possible. When you look at student loans, you can see, if you go to studentaid.gov, you can see all your student loans there. You can download a list, and you can see the smallest loan that you have to the largest loan, right? And the debt snowball is to pay off smaller loans first, and then use that extra money to help paying off larger loans. Now, this is really just a mind trick, right? Because once you pay off that smaller loan debt, you kind of get energized in being able to pay off the rest. The debt avalanche is really my personal favorite, because you can look at the higher interest rate and you could target paying that off first, because we want to pay off the most expensive loan first, and then put money towards the lower interest rates if you can. So if you do have a windfall of some money, or you can pay more towards a loan, you can target which loan you want to pay off first. I did have a question in the chat. What is the best way to estimate when your loans can be completely paid off? That loan simulator at studentaid.gov, that's going to show you when your estimated time off, when you're going to be repaying it, and how much you'll pay over the life of the loan. So when you use that loan simulator and it gives you your options, you can see side by side each plan, the day when your loan's going to be repaid, and how much you will have paid out of pocket total. So that's the best way to estimate like what's going to be the cheapest option for you over time. Great question. Thanks for that. Okay, so we had mentioned refinancing earlier. Refinancing is where we're going to take out a bank loan and we're going to pay off a federal loan. When we do that, we lose benefits of having a federal loan. All those different repayment plans, refinancing into a bank loan, you won't have that option. You will have one plan. And there's no takesies backsies. You can't get back into federal loan program, right? So if you're thinking about refinancing, this might be for someone who isn't pursuing public service loan forgiveness, someone who is not a teacher, because there's teacher loan forgiveness, and you have a pretty solid income, you know you're going to be able to pay this off, so you're not going to need to change repayment plans. Refinancing might be a way to get a lower interest rate and aggressively go after that. Okay, again, let's pump the brakes on that. Use this with caution, okay? And the last thing I'll say here is that I know this is easy to say, it's easier said than done, but try to avoid taking out more debt if your priority is to get your student loans done so that you aren't paying on that anymore. My car is on life support right now, and I have some other financial goals, so I'm working on paying off that debt that I have before getting a new car. Ain't easy right now, I can tell you, but that's kind of what we're working on. And I wanted to say, Liz, you had some thoughts on refinancing.
Yeah. So I know that Nikki pushed it home on the refinancing with caution. So I just wanted to give some ideas on what is with caution. Be aware of interest rates, the possibility of them changing, how they work. Also, what possible outcomes there may be, or opportunities that there may or may not be available. What I'm referencing there is Nikki's mentioning of the benefits of having a direct loan over a private loan. Now, sometimes refinancing is the right decision for your situation. Just pay attention to the details and if there's any deadlines for forgiveness opportunities. I'm not saying any answers necessarily, but just be careful, do your homework, and then you should be good to go. All right, let's move on over to the next slide. So, lots of information, my head is spinning. I wouldn't be surprised if yours is either. So the biggest thing on this slide is ask for help. Also keep in mind that we've been hearing about very long hold times trying to get a hold of servicers. So I know that we've been talking about, oh, you need to go to your servicer for this. You need to go to your servicer for that. There are long hold times. In fact, there was one servicer that's already shut down their call center twice. So yeah, it's fun. Anyways, point is ECMC Solutions can help you. Our counselors will actually walk you through studentaid.gov, making sure you have your login and your servicer's website. So just to give you an example, Ed Financial's website's pretty complicated right now. And sometimes the other ones can be confusing too. So the counselors will help walk through that and just make sure that everybody's good to go there. All right, Nikki, do you have any other tips for them?
Yeah, absolutely. So definitely asking for help, but like Liz said, we want to act immediately because it's going to take a long time. So keep in mind that there's like 42 million borrowers entering repayment at the same time. Long wait times are to be expected. So we want if people to reach out immediately. We want you to act immediately if needed, because it's going to take a little while. So definitely reach out for help. There are all kinds of options. If you are struggling to make the student loan payments, or you're working with a borrower who is really struggling to make their payments, we can switch payment plans. Why switch to a new repayment plan? That SAVE repayment plan is going to be a game changer. But keep in mind that you can change your repayment plan as much as you need to, and it's free. There's also the option of deferment or forbearance, and this is where you are putting a pause on your loan payments, just like the pause that happened over the pandemic. That's a certain type of pause. A deferment or forbearance is if you're experiencing economic hardship. Maybe you've lost a job, or you just have a hard time paying your bills. You could apply for a deferment or forbearance, and whichever situation you're in will determine which you qualify for. But also if you are going back to school, or if you're active in military duty, that might go into a pause as well. Okay, got a question. Can borrowers with Parent Plus loan apply for the SAVE plan? And I think they can. Liz, do you have thoughts on that?
This is one of the gray areas that I don't believe has been fully outlined or detailed. I would pay attention to more updates on that. There have been questions in reference to it, but there's not much that I can speak to on it.
Absolutely. Stay tuned, I think.
Yeah.
What we're hearing. There's a lot that's shifting day by day. Stay tuned, and I'll do a little research before I follow up with folks to see if there's any updates on that. All right.
Okay, there's more.
Well,
wait. Yeah, but wait, there's more. So at the beginning of the presentation, Nikki talked about an initiative called On-Ramp. And this is going to be in place for the first year of repayment. So what is On-Ramp? It's a temporary initiative to protect borrowers from the harshest consequences of late, missed, or partial payments for up to 12 months. So this is running from October 1st of this year to September 30th of next year. Now, what do we know about this? First off, borrowers do not need to take any sort of action to qualify for this on-ramp. Nothing. Payments will technically be due. Interest will accrue. However, interest will not capitalize at the end of the on-ramp period. No credit reporting will occur, and borrowers will not be considered in default or referred to any sort of collection agencies for those late, missed, or partial payments during this on-ramp period. kind of like save, we're needing more clarification from the department on implementation details, and this will help us understand more of what this initiative's effects and benefits will be. Until they release that, this is what we do know. So what we've been discussing up till now are options for those that are not in a defaulted status. Well, what if you are in that boat? Nikki, I think there's a program for that.
There is a program. The Fresh Start is a one-time temporary program for people who are in default. And just to back that up for a second, default is when you have been delinquent on a federal student loan for 270 days. So for 9 months, you have not made a student loan payment. The loan moves from in repayment status to defaulted status, which I always joke is like tripping into a vat of acid. For someone who couldn't repay, it's now a lot harder, okay? So it moves from in repayment, where you have all these options to change your repayment plan, to in default, where it's moved to a default resolution group, where the fees and the interest rate is so much higher. So it's now a more expensive loan than you had in the past, right? So moving into default is terrible. So as part of the benefit of having the federal student loan right now, this one-time temporary program will give people a fresh start, right? So what the borrower would do is call, there's a phone number at the bottom. They call Department of Ed and ask to be transferred back into a loan servicer. So people who are in default do have to take action on this, right? They get immediately put in. This call takes like 10 minutes, super easy. They get sent back to a loan servicer. They're back into in payment status, which means you can opt for a different repayment plan. You now can ask for a repayment plan, which might be $0 a month, depending on your income. You've got access back to deferment and forbearance options, okay? If you're gonna go back to school, if you were in default, you couldn't have access to federal student aid. This Fresh Start puts you back into good standing, so you can access federal student aid. And the record of the default is gonna be removed from the credit report. That is a big deal. If folks want to take advantage of this, we need to do this before September 2024 when the program ends. But just keep in mind that we want to get this out of default for anybody who's in default. We want to do this as soon as possible, right? That it's sitting there at a high interest rate is not helping the borrower at all. So great program there. Okay, so let's talk about the one-time RDR adjustment. This is called Income-Driven Repayment Waiver. It's being called a bunch of different things. Basically, what this is doing is kind of, I don't know how to say righting a wrong, but it's kind of putting things back into where they should have been, but with some bonuses, okay? So just to give you a little bit of background, when a student took out a federal student loan, they sign a master promissory note. And this was what you're promising to repay your student loan. In that legal agreement, it outlines all those different income-based repayment plans, right? The income-based repayment plans all have baked in forgiveness with them. So if you repay in one of these income-driven plans for a certain period of time, anything that's left on that is going to be forgiven, okay? And each plan is a little bit different depending on which plan you're in. So I just took a little snippet of the income contingent repayment plan. If you can see, I highlighted in yellow that if your loan is not repaid in full after the equivalent of 25 years of qualifying payments, over a period of time of at least 25 years, any remaining loan amount is going to be forgiven. So what this means is they're going to look at, for this repayment plan, if you made 240 payments in this plan, it doesn't have to be consecutive, just it's going to have to make 240 in this plan. Anything left over, if you still owe money, it's going to be wiped out. Now, for a series of reasons, this wasn't happening. There's folks that are saying that they were given incorrect guidance. They were being told to go into a graduated plan, which doesn't have that forgiveness option, or they could have been working towards public service loan forgiveness, but they had the wrong type of loan. I'm gonna talk about that in a minute. This wasn't happening. So the Biden-Harris administration came up with this one-time adjustment where the Department of Ed is going to go back and they're going to look at all those payments that were in the right type of loan program, which is any direct loan or federally held FFELP loan, whichever. If your loan payment has been on pause because of COVID, chances are you have the right type of loan. So they're going to go back and look at all of these. And they're going to see if anyone should have gotten forgiveness by now, right? So anyone who was in an income-driven repayment plan at some point, anyone who was pursuing public service loan forgiveness. They may even made some options for people who weren't in the right type of plan. So they're going to go back and look at these and they're going to do a one-time adjustment and they're going to count those payments. And for anyone who has met those qualifications, they're going to wipe out the loan. So for most people, this is going to happen next year in 2024. A good deal of people have already gotten forgiveness on this. So they are first looking at people who have had loans for a super long time. So that's who they're looking at first. But I do want to point out for people who haven't had the right type of loan. So someone who had a FFELP loan or Perkins or a HEAL loan, that doesn't qualify for this adjustment. But if you consolidate before the end of this year, they will consider all the old payments towards that 240 or 300, whichever forgiveness plan that you are in. They're going to consider those payments. This is a one-time deal. So we really want folks to act on this. Okay, so this is going to have a really big impact. A lot of people are going to get forgiveness immediately. But this is going to be the impact of this one-time adjustment. They're going to look at all payments. So even plans that didn't count before, they're going to look at them and count them. Some periods of deferment and forbearance will be counted. This could result in immediate forgiveness for people who have already been in repayment for a really long time. Normally, when people consolidate and they're working towards any type of forgiveness, income-driven forgiveness or public service loan, normally, if you consolidate, you're back to square one and those loan payments start at payment one. So all the payments you made before, they weren't counted. But if we do a consolidation before the end of this year, old payments are going to count and you're not going to lose progress towards forgiveness. Another benefit of this is that if you have multiple loans, and maybe you took out a loan a long time ago and you were making payments for a really long time, you have another loan where you haven't been repaying for so long. If you consolidate them, they're going to take the highest payment account and apply it to all of them. But it has to be consolidated before the end of this year. There is way more to this program, but we've got a few more things to talk about. Join us on November 3rd. For a webinar with Betsy Mayotte. She is amazing. She is so knowledgeable, all the ins and outs. Go to famemain.com/check-in so that you can join the webinar to talk about this. I'm going to be on there with her, so come join me for that. Okay, so I want to talk about forgiveness and cancellation benefits as well for having a federal student loan. So if you are a teacher and you have federal student loans, if you teach full-time for 5 complete consecutive academic years as a highly qualified teacher in a low-income school or educational service agency, and your first loan was after October 1st of 1998, you could get up to $17,500 forgiven on a federal loan. So just keep in mind when we always say, before you refinance, like what if you're a teacher, you could lose access to this benefit. Public service loan forgiveness. So to get public service loan forgiveness, now this, I'm going to talk about a quick cheat for this in a minute, but just to think about this, I consider this my trifecta. I like to use my little triangle here. If you make 120 payments on eligible loans in an eligible repayment plan while working for an eligible employer, that counts as one payment. If you do that 120 times, anything left on that is wiped out. That's public service loan forgiveness. There's a lot of ins and outs of this as well. But because of that income-driven repayment waiver count, a lot of the barriers to accessing this are going away as well. But we want to act on public service loan forgiveness before the end of this year. Hang tight on that for a second. I just want to talk about two more benefits. If you have a total or permanent disability and you have a federal student loan, you can apply to have this loan discharged, wiped out. That has to be documented, but it can be discharged. Or if a borrower of a federal student loan dies, the student loan can be wiped out as well. That can be canceled. You have to document the death. Liz, you had some thoughts on documentation. That's the name of the game here.
Yeah, document. No one can argue with clear documentation. Document your payments made, the entity they were made to. I'm referring back to some servicer switches. When they were made, make call notes, print out physical copies, keep digital copies. Absolutely zero of this can hurt. It can only help. All right. I think I hammered that home enough.
1000%. I can't say documenting enough. That's fantastic. All right. So I want to tell you about that cheat tool. If you go to studentaid.gov/PSLF, this is a help tool that behind the scenes, your federal loans are already loaded, right? So they know if you have the right type of loan, they know what repayment plan you've been in, but what they don't know is that you've worked for a qualifying employer. So you're going to use this tool to input who your employer is, right? This is going to walk you through the steps of trying to figure out how many payments count. So behind the scenes, what is happening is that they're building an employment certification form that's going to be sent to your employer for them to sign off and say, yes, Nikki has worked for this qualifying employer for this amount of time. That form then goes to the Department of Education and they can match that up against your loan to see how many payments are going to count. How many payments did you make while working for that qualifying employer that are in the right repayment plan with the right type of loan? So go to PSLF, the PSLF help tool, fill this out. This has become so much smoother, I would say, in the last couple of years. They've automated the process where that employment certification can be sent directly electronically to your employer. They can fill that out. Or you could print off a copy, have them sign off on it and mail it in. I'm kind of on the fence about doing it electronically or printing off a copy because I do like that documentation, right? I think it's faster if you do it electronically. I'm a bit of a control freak, so I like the paper copy. It's just going to take a little bit longer. That's the PSLF tool. Okay, so I want to talk about a bonus here. In Maine, we have access to something called the Student Loan Repayment Program. Used to be called Opportunity Maine. It's been around for quite a while, but this year, for this year, it's undergone a transition where it used to be a super complicated tax program to be able to access or even figure out, and it's been really simplified. This is a refundable tax credit that will reimburse student loan borrowers up to $2,500 in student loan payments if you live and work in Maine. So payments you've been making, when you file your tax returns, you can get a credit that is actually refundable. You can use that credit to pay off your loan next year. Remember how we were talking about found money? Use that tax refund to help pay off your loan going forward. And you can do this again year after year. There's more information about this at maine.gov/revenue/forms, or you can go to liveandworkinmaine.com to find out more information about that program. And also, if you're filing a federal tax return, there is a student loan interest deduction. So this is tax deduction for interest paid on student loans for yourself, your spouse, your dependent, applies to all loans, not just federal loans. The maximum deduction is up to $2,500 a year. More information about this on irs.gov. Okay, so I just want to tell you about resources. Again, ask for help. On the FAME website, we have famemain.com Repay Restart, which has a ton of information on this. If you are worried about getting your financial house in order, we have a whole financial wellness team that will help with this. And you can get more information at famemain.com/financial wellness. Again, fame.enrich.org has tools to set up the budget that work towards your goals. ECMC, our partner that Liz works for, ecmcsolutions.org. And also another partner we work with is Betsy Mayotte. This is her picture on the bottom right, super cute picture. freestudentloanadvice.org. She's going to be doing the webinar for us on November 3rd, so join us for that. Liz, can you talk a little bit about services that ECMC Solutions have?
Yeah, sure. So if you've recently departed from one of our partnering schools in Maine, you can check with Nikki for that list. Go ahead and give our counselors a call. Like I previously stated, the counselors will walk you through studentaid.gov and your servicer's website. If you don't know if your loans are with one of our participating schools, you can call us as well. Might not be able to speak to your particular situation just because we don't have that information in front of us, but we can at least point you in the right direction and resources to utilize. It's all very confusing. There's rumors and things like that, but the counselors will focus on the facts and make sure that there's a differentiation between what is 100% factual and kind of up in the air. Now, I see a few of those schools on the call here. We do have multiple channels for you and your students to utilize in order to get this great information. Obviously, you can call us. You can email us, visit our website, as Nikki said. And on the website, we have a number of resources. First off, we do have a live chat feature. You can make an appointment now with us. So just log on in there, get to the scheduling calendar, and a counselor will call you at the time of your choosing, which we're super excited about. We also have live student-facing webinars that are run by our counselors. So you can get the same great information. Let's say you are a student, have questions about your own situation, want to get a little bit more detailed in there. You can actually connect with the counselor that led or facilitated that webinar to get a little bit more information in a one-on-one setting. So like I said, originally you don't need to pay anybody. We're here to help you at no cost. This is what we do. We support you and we definitely want you to succeed. And like we said earlier, possible long servicer hold times, there's just been so many changes. And so it was kind of expected. So definitely do the best you can. But if you're getting a little lost there, please feel free to give us a call and we'll do our best to help you out. All right. So what if I have a dispute? Like my balance should not be that high. What should you do, Nikki?
So there is an organization called the Ombudsman Group, which is, I kind of want to call it like the Supreme Court of federal student loans, where if folks are feeling like they maybe had payments that should have counted towards loan forgiveness, or that they should have had access to different repayment plans, you can contact this group that will work as sort of a mediator between you and the loan servicer. This is sort of I don't want to say a last case scenario for folks. We've had very good luck being able to work with the loan servicer if there's been some discrepancies, but again, super long wait times. And sometimes you kind of have reached a stalemate. The ombudsman is there to help with that. So there are more resources out there. Okay, thank you all for joining us so much. I know that this is a lot to take in. We're here for you. FAME is here for you. ECMC is here for you. We got all kinds of resources, so please feel free to reach out for us. Any questions? I don't see anything in the chat. Just want to make sure people know that we're gonna stay on and answer those questions. If not, I'm gonna stop recording.